Nice to see you here. This is Rob Reinhold. I'm joined by Mr. Darren Fisher. And wow, what a week we had. It was a fantastic week if you were long, a crazy week if you were short. But let's get into it. So last week, the big news was that we had two things. We had elections and we had the CPI report. Those are the two things. And then not just that, let's talk about what might have been the biggest news of the week that kind of got overshadowed by these two things. In the world of crypto, the second largest crypto exchange, FTX, and brokerage, they stopped giving out withdrawals to their clients on Tuesday, and it created a huge panic. And at one point, the S&P was up 2%, and this panic hit. And all of a sudden, all the cryptos dropped 15, 20%. There was just pandemonium, and it took the rest of the market down. So Monday, Tuesday, Wednesday were fairly shaky, and it was really because of this big crypto story. On Friday, they came out and basically said, we're done. We don't have any money. And it's now looking like people who deposited their money with them may not get their money back. So that was just a big, big thing. And these are the kind of things that happen in bear markets. Warren Buffett has one of my favorite quotes. He says, "It isn't until the tide goes out where you get to see who has been swimming without pants." Now, I know it's a pretty weird thing to say, but it makes sense. Recessions, they cause these things. Or shouldn't cause these things, but expose these things. I remember in 2001 when the recession there exposed Enron. And we all know what happened in 2007 and 8 when they exposed the banks that had over-leveraged themselves. So these are the kind of things that happen in bear markets, is that the people without any pants that have been swimming around the whole time and you couldn't see it, they actually start to go under and out of business. So let's get back to the equity market. A flat half of the first week, and then we saw a big jump. And the worst stocks rallied the most. I talked about this on my Thursday after market video, and I actually showed a chart of Carvana. Carvana was a stock that had been at $380. It went down to $7. At the end of the week, it closed at $12. That was almost a 60% jump from the bottom. So the worst garbage got the biggest jump. Now that is the hallmark of a bear market rally. And that's exactly what we saw. I mean, Darren, what did you see out there when you were trading this week about the worst stocks having the biggest rallies?
No, I saw some of that too. And we've talked about this before. If it's the really crappy stuff that is just perennially weak that gets the biggest bump, you've got to play the technicals, obviously, but it really calls into question how solid those technicals are. I mean, that's almost a hallmark of a short squeeze. Now, I saw a little something different in the markets. If you looked at, from Friday to Monday, Tuesday, Wednesday, that was a classic bear rally to me. On Wednesday, we had a lower low and a lower high. Really good looking red candle, but then everything changed. All the positive market action changed on Thursday and Friday. I mean, this is one of those rip your face off bear rallies that happened over a period of 2 days.
And it was really fueled by that CPI report. So we already covered this, but let's go through it a little bit more. The expectations were for a 0.6 headline number, and we got a 0.4. That's much weaker than expected. The core expectations were 0.5%, and we got 0.3. Now, look, I know this is just one report, but the market has been waiting for this one report. If you remember, we got the same kind of report back in July. The market rallied 20% off these numbers. The market wants these numbers. It's a hint that maybe the Fed won't be as aggressive as the market is fearing, which led us to a couple things. We saw the dollar get killed. This negative 3.5% on a week for the dollar. To put this into perspective, we didn't get a number like this since March of 2020, in the height of the panic and the absolute craziness. That's how big this number was. We saw bonds decline by about 7%. So these two things were actually very, very bullish, and it helped fuel the rally. So we already had this rally going on, but the dollar crashing, the bonds crashing, this all of a sudden makes all of those little garbage companies that were on their way to zero, that were dependent on the bond market to raise new funds because they weren't profitable, they got a little bit of a reprieve. All of the companies that do business overseas, they got a big bump up because all of a sudden the dollar is not as strong. And emerging markets, they got the biggest bump. And I actually think there's still a lot of room left in the emerging market international sector. The dollar has been absolutely crushing these economies. And with a little bit of relief on the dollar, these economies have a lot of ground to retain and to regain. So, big week this week, all across the board. And it really sets us up for the next couple weeks because remember, the market right now is having a party that inflation has peaked and that they don't have to worry about inflation anymore. Now, that may not be true, but for the next 3.5 weeks until the next CPI report, it is true. I feel like we're in this little period of time, a window, where the market can continue to have a party. We also are going into some holiday weeks, which are, on the most part, very bullish historically. I think that we actually float a little bit higher until we get into the middle of December and have to maybe face the facts of the new CPI report. What do you think, Darren?
Yeah, that's a good call right there. I mean, you've got some time. I mean, right now the Bulls wrenched control away from the Bears on Thursday and Friday this week, and the same as anyone else, they're gonna ride that as long as they can. I think we're gonna see in our chart here in a little bit. They expended a ton of energy. So I'm not exactly sure how much gas is left in that tank. But I mean, you can see, the NASDAQ up 8.8% in a week. The Spiders up almost 5.89%. I mean, these are huge moves for broad markets. And you really got to ask yourself, where can I go after expending that much energy that quickly?
No, that is absolutely a great question. I mean, where do you go on a week where the S&P was up 6%? And that was already on top of about a 10% rally the weeks before that. The answer comes down to the chart. And so let's look at the charts and see what the charts are saying. It is crystal clear that there was hard resistance at 3,900 on the S&P. We had a lot of points here where it said, hey, this is a really big resistance line. And we broke it, and we blew through it. So take a look at the moving averages. We now have a 20 moving average above the 50 for the first time in a couple months. We are now looking at higher highs and higher lows. At the moment, everything's looking good. But Darren, you are exactly right. There was a lot of energy expended. And whenever there's a lot of energy expended, I always give an example of someone doing a 100-yard dash. Now, if you've ever done a 100-yard dash, you think, I can do it. That's not a big deal. About halfway through that thing, you're like, oh my gosh, this goes forever. And by the end of it, you are spent. Now, you got to take some time to rest and recover before you can sprint again. And so that's what we just did. We just had a really big rally over the last couple of days. And this is on top of a pretty decent rally over the last couple of weeks. Our next line in the sand here is 4,100. And it looks like that is the next point. Everything here is bullish. I understand you may not want to be bullish. I understand you may not feel bullish. But when we're looking at a chart, if you could wipe everything off your memory, let's say that you were in a coma for the last 2 years and you woke up today and this is the chart you looked at, what would you do? And the answer is you'd be like, hey, on the next pullback, I'm going to buy this. Or if it pullbacks or bases, I'm going to buy this because it looks like 4,100 is the upside. So the S&P has been showing us some strength for the last month, and we pointed that out at Maverick. We've said, hey, look, the regular market is actually doing good. When we go over to tech, all of a sudden, tech is a different story. Now look, tech is still technically above the 20, above the 50, but we are definitely not as strong. We've got some more resistance coming up. We've got a whole bunch of little points here that we need to get through. So while tech looks bullish, I have to be bullish tech as well. I am not as excited about tech as I am about the general economy and general stocks. And we've been pointing that out for the last month or so. Darren, what do you think happens to tech here?
I think it continues to underperform. I mean, the interest rate environment looks like these are people smoking as much opium as they can, that they think the Fed has the option to let up on the gas. I really don't think they do. There's a lot of people that think, oh, great, we got a little bit lower inflation. That inflation number is still 7%. There's no central bank that wants inflation at 7%. And people have to understand it. So there's a lot of hopium smoke in the air right now. And tech is very dependent on the bond markets, just like you said, some of the smaller ones. Everything is so tentative and tenuous right here. I think you're going to see a greater appetite in, call it the 1980s bull market. Industrials are going to be looking pretty good. Energy has looked great for a while right there, but how much resistance can we get past on that one? So there's, and you can see here in the VIX, you've got a lot of people. There's a lot of anxiety has just flooded out of the market very, very quickly on some very choppy market action here. So, we're down at very bullish levels right now. Look, don't get me wrong. You have to be bullish. I've been bearish for a while. The market on Thursday and Friday disabused me of that notion. I have absolutely no problem saying, all right, on Wednesday, I was bearish. On Friday, I'm now bullish. I have absolutely no pride over that. But I still am going to be looking at this market and trying to get into the minds of the portfolio managers as why they have really thrown caution to the wind right here and let volatility just collapse out of the market so quickly. That's something I'm going to be trying to wrap my head around.
I think everyone's trying to wrap their head around it, to be honest with you. These are where bottoms are made. I'm not saying that was the bottom. It was a bottom. We've had a few bottoms this year that have ultimately been broken. But at this point, I think a lot of people are looking at things saying, okay, look, the market is clearly being bullish, but the economy and the fundamentals are clearly being bearish. And it's definitely a difficult time to really match those up together. But this week, let's take a look at this week and over the next couple of weeks, because as traders, we can talk about what's a big picture thing here, but really, we care about our trades we're going to make this week and the week after and the week after. That's it. So I think when you look at the market, Darren, you're exactly right. You got to be bullish. Now, we spend a lot of energy. So if anyone says, hey, Rob, I think there's going to be a rest, I'm with you. I agree. But we might just say, hey, instead of up 7%, we're only up 1 or 2%. I don't see us going lower this week. And this is the week before our Thanksgiving week, which is historically the strongest week of the year. Now, it is up the most amount of times, but it's not up all that much. The week of Thanksgiving is a very, very bullish week. So I'm looking at everything saying, okay, what could possibly derail this? We are pretty much going to be wrapped up with the elections. Remember, we have been beating the drum of seasonality patterns. We talked about how the 6 months heading into a mid-cycle election are the worst months of stock market returns. The 6 months after the midterm election are the best months of the stock market returns. We can't ignore the seasonality, and it looks like it's divided government. It looks like the Republicans are going to pick up a few seats in the House. The Senate is going to stay 50-50, 51-49. That is pretty much divided government. The market's generally like this. And we think that the dollar and interest rates, let me take that back. The dollar is going to go lower. Interest rates are probably going to stop going higher, which the market wants. This is very, very bullish for emerging markets and stocks that do a lot of exporting. The industrials, as Darren mentioned, are the prime place to look. So on the schedule this week, we do have one report that I think could derail everything, and that is the PPI. Generally, we get the PPI a day before or a day after the CPI. For some reason, this week is a full 4 days after. So Tuesday, if this PPI report comes out hotter than expected, what's going to happen is everyone that made these big bets on Thursday is going to start to say, ooh, maybe I'm wrong. Maybe inflation hasn't peaked. A hot PPI number would definitely signal to me that the market is now going to pull back, not base, but pull back. If we get a decent PPI number, as expected, a little bit lower than expected, then I think that a base or maybe a little move higher is definitely warranted. Everything else, no one cares about. No one cares about retail sales. No one cares about anything. They just want to have a party for the next couple of weeks that inflation has peaked and everything is great. When we look at the pure numbers and at the pure technicals, we are above the 20 and above the 50. And our slopes, that 50 has not started turning up yet, so we're at a +2. I know you may not feel like a +2. I know you may say there's lots of problems. I have neighbors that are being laid off. Like, I get it. It doesn't matter how you feel. As traders, you don't trade your feelings. You trade the chart. And the charts are saying be net bullish. That's what they're saying, and there's nothing you can do about it. So the general overall market says you want to be bullish. Let's take a look at the sectors, Darren.
Yeah, the sectors, you can see we've got some, it's broad across the board. I mean, take a look at communication services and technology. Those were the ones that looked like a dog's breakfast 2 weeks ago, and they had the biggest gains. Coming in right there, real estate and materials looking pretty good. Materials, like you said, I think that jump was largely due to the weakness in the dollar. Real estate was in the weakness in the supposition that the Fed isn't going to have to raise interest rates as much. I mean, in the middle of the pack right there, industrials, financials, and consumers. And you're going to see them. These were three sectors that we had, we're pretty bullish on the week previously. Really, the surprising one for me is the underperformance utilities. That one, I mean, it held in there. It still made a gain, but with the future interest rate picture beginning to look rosier, at least on the part of the investors, I was really surprised that utilities didn't participate any more than what it did. So going in here, I'm at a 0 in utilities. This is one, I was at a 0 last week and was 0 this week. It's stuck between that 20 and that 50 right there. I mean, Thursday was very briefly above it. Friday it went below it. This just looks like sideways action to me. So that's how I'm going to play a lot of utilities here. Communication services, I've been beating communication services up for a long time, pretty much the entire year. I was at a -3 last week, but you can see Thursday, Friday, the market action, you just can't ignore it. I mean, we're sitting right at the 50 right now. So give me another couple of days to confirm, but right now I'm at a 0. This is still in a downtrend, but just based on the last couple of weeks, last 2 days of action, as much as it came up, I have to say, even though we're at the top of that downtrend right there, this could break out very, very easily. So I want to see some good action above the 50, then I'll be more than happy to get bullish on communication services. Right now, though, I'm at a 0. Real estate, it was a 0 last week. Thursday and Friday look really good. We're firmly above that 50. I'm at a +1 right now. Going over to industrials, I mean, I was at a +2 last week. I'm at a +2 this week as well. The only reason I'm not higher is because we're right at resistance right there. That's the thing. You want to break through that industrials and show me that you can power through that. I am more than happy to give it a +3. Right now, I'm still bullish. I just want to wait and see until you can break through resistance right there. Healthcare is another one. I'm at a +2. If we'd had a green candle on Friday, I'd have been a lot more bullish on this. We just had a little bit of reversal. I want to see one more day above previous resistance right there. Then I'm happier to go a little bit more bullish on that one. But the chart still looks good. I'm at a solid +2. Financials, this is another one. At a +2, go to +3, but we're just at that resistance right there. That's the only thing I want to see is can you pass through that resistance and stay above it, and then more than happy to be even more bullish on there. Consumer, we were at a -2 on consumer last week. I'm at a positive. I'm at a nice solid 0 on consumer right now. I mean, just the way the market action looked. I mean, look at that action on Wednesday. Okay, if that was not a trigger to get short, we'd broken through previous support, really, really strong, really decent volume as well. Then immediately, just that action on Thursday and Friday, we just killed that thesis. So we're up between the 20 and the 50. I'm at a 0. I want to see which way we go. We could probably base right here between the 135 and 145. Does not surprise me at all. Down to tech. I'm actually a +1 on tech. Had a decent thing. We've got some resistance when we broke out of some very near-term resistance on Thursday, but it's right behind that number 1. There's some more resistance up there at about the 137 level that you're going to see up there. So if we can get past that, then I'll be more than happy And you can see that 20 period moving average is yet to cross over with the 50 right there. As soon as I get that, have a couple of candles with that 20 above that 50, then I'd be more than happy to say, okay, we can turn on the heat on tech for a little bit. Materials, looking pretty good. We're at +2. The only reason is back in that August time period right there, can we get through that resistance? I mean, that's going to be the question right here. And as you see these individual sectors, that the strong performing ones are all at these levels of resistance that are, were set, back in August, September, sometimes out to July. That would almost support the thesis that we're going to go sideways here until the sectors can break through that resistance and then pull the rest of the market higher. That's just me spitballing right now, but that's what I'm paid to do. Energy, again, looking really good. We're at resistance set 3 days ago. I think we can blow through that fairly easily. I'm not going to say that the area back in June. I think we're high enough above that to say, okay, yeah, that doesn't matter anymore. What happened back in June doesn't matter, and we're just going to see where we can go. But I'm +3 on energy. I think we've been +3 for quite a while. So look at everything. We have nothing for the first time in a long time. Nothing on the negative side of the outlook. Consumer, communication services, and utilities, kind of neutral on. See which way they go. We're at a 0 right there. Slightly bullish, real estate and technology at a +1. Even more bullish, materials, financials, healthcare, and industrials at a +2. And then energy over here. I mean, this has been at the right side of this bell curve for as long as I can remember this year. So it's still looking really good right there. So let's look at a couple of possible trades. Now, last week, we were sideways on VST. And VST was up 5.5 right there. I mean, you can see it broke out. It depends on where you put the strikes on and how you're going to play this. You might be looking at a very small gain right here. You're probably right at the 24 area is probably about your break even. So if it comes down a little bit, you're probably going to make a little bit of a profit, but I don't think we're going to make as much profit as we thought we were going to last week. This is still looking good. We've got a little bit of time left on this trade, and if it pulls back even another 50 cents, I think we're looking decent on that one. Looking at NRG energy, we're going to play this sideways to bullish. So we're going to go long those December 40s, and then coming out 1 week, we're going to short those 45s against it. So all we want it to do is just stay right in that 45 area right there, between 44.50 and 45 right there. It just stays up there for a week. That's all. I'm not asking a whole lot. Don't want you to go rocking it up to 50 right there. We just want it to stick around, and then we can reevaluate what we're going to do the Decembers. Communication services. Last week we were short SE, and I mean, even though it doesn't look like it, that move that we had, I mean, if we'd have gotten out of this trade Wednesday, it would have looked great, but we didn't. We held on to it. SE was actually up 12.3% for the week, but when you're dealing with something that's such a downtrend, to go from 45 up to 49, and that's a pretty decent move right there. Look at the scaling on Honest. So right now we're looking at Facebook or Meta, whatever you want to call it. This is a nice bear rally. Wait for confirmation though. It just came up to its 20-period moving average. I mean, this thing was so far down about that 90 level right now, and it rocketed up in 1 week up to 113. I mean, that's huge. Now you've got a lot of heavy resistance right up there at about the 125 level. But so far, I mean, it's just broken down. This thing, despite the fact that it moved so much in a week, it's so underperforming everything. So how do we want to play this? Wait for that confirmation. Wait for the lower low, the lower high, nice red candle, hopefully, and then just do a 110, 115 bear call spread. It's a 5-day trade, and we're just let it go. And I think you're gonna be pretty good. Now this is gonna be delta dependent. You're not gonna you're not gonna pull a lot of theta out of this. So this is gonna have to move down, down at least down $5. The more it moves down, the better it's gonna look. This is a delta dependent trade. In healthcare, last week we were long Gilead, and Gilead really didn't do a whole lot for us. I mean, it's still a decent trade, and we're still in it. It's looking pretty good. Gilead was up by 1.8%, but I think it just wanted to hang out here for a little bit. The attention was on a lot of other things, So instead of nobody took money out of Gilead, but nobody really had any interest in putting any more in when a lot of other stuff was moving much more quickly. So that's fine. We'll just let this one hang out for a little bit and see where we go. So this week we're looking at Pfizer. This is a nice high tight base right here. It's hanging out. It hasn't been making a whole lot of movement, but it's looking pretty bullish. It hasn't gone down. It's just wanted to stay in this very discrete range. Had a nice run up, just taking some time to chill out here, build some energy right there. So how do we want to play this? We've got a little bit of resistance out there at the 48 level. So what you do, you go along the December monthlies, the December 16th to 45s right down there, and then give it a week trade and short the 48s against it. It's just got to stay right in that range. We don't expect a whole lot of movement from it, but in there, reevaluate, and if it closes at say 47.95, you're going to have a max gain right there. You can decide what you want to do with the trade right there.
Switching on to industrials, last week we were looking at being long to slightly bullish in American Airlines. And you can see we got a decent little breakout here on Thursday and Friday, but we were looking at this saying, hey, you know what? These highs back here probably weren't going to break. But we're pretty sure that these lows over here weren't going to break either. So again, slightly bullish, higher call on American Airlines. Look good. You could also look at United Airlines this week. That's got a pretty decent looking chart. But we wanted to really pull out some real relative strength here. We like the industrial sector quite a bit. Darren, you rate it as a +2. It's awesome. This is one of the best performing sectors out there and one of the best performing stocks in that sector. This is Honeywell. Take a look at this. This bottomed out at 170 a month ago. Remember, this is like October 1st. The market went down another 10% from October 1st to about October 20th. This thing did not get the memo. This thing was on fire, spent a little bit of time at resistance, consolidating, and broke out higher. Now look, this has made a run from 205 to 215. I fully understand that. This is up 5% in the last week. If you say, hey, I want to wait a little bit on this, that's perfectly fine. This is where I really love to pull out diagonal call spreads. When I'm super bullish on something, and I'm not totally sure it's going to pull back because the market is so strong and the sector is so strong. So this is where a diagonal call spread really comes in to where you can go in and say, okay, you know what? 215, that's going to be my max gain point. My break even is going to be somewhere around 209. And then down here, I've got an order says, hey, if it goes below 205, let's get out. As you can see, there's a lot of area in here that this could just hang out. And as long as it hangs out in this area on the risk graph, you're very happy about it. If it does continue to move higher and blows higher, you're going to make a nice profit. If it hangs out in this area, you're up a little bit, down a little bit, and then at a certain point below 205, you just want to get out, take your money off the table. I really like stocks that have shown they're going to outperform. They show they're strong, and you say, you know, I just don't know exactly how to get into them. Diagonal call spreads are a great way to play these. Financials were another great sector. Darren, you gave them a +2. I agree. Last week, we were looking at Morgan Stanley on a sideways to bullish, and that's exactly what happened. It went up. Here's the problem. When you're sideways to bullish, you don't want it to go up too much. And this thing had a good rally here, up about 7%. And so it wasn't as profitable as we would have liked to have been. If we were just straight bullish, it would have been a better trade. But the way we made it, it was still a slight gain, and we can profit that and move on to the next. This week in financials, we are looking for IBN. Now, this is a Indian bank. And I want you to take a look at this chart because this is what you see when you see international stocks. Pretty much every day there's a gap. The reason for that is that this also trades over on the Indian Stock Exchange. And so it's going to trade there first, and then it's going to open up at a different price here in the US. It's dual listed, it's totally fine, but just understand that these stocks are very difficult to just get in and get out of because every day it gaps and it basically just sits there. As you can see here, most days are just gaps and they just sit there. Gaps and sit there. Gaps and sit there. And so understand that you need to play this as more of a set it and forget it trade. You can't just say, I'm going to get in and out whenever I want. No, look, these ones you've basically got to say, I'm going to be in this for the next couple of weeks, and that's it. As you can see here, we've got some resistance up here in the 23 to 23.20 area. And that's exactly what we're going to be playing here, is we're going to take a look at diagonals. Say, okay, if we think there's some resistance up here at 23, we're totally fine with that. We'll just put a trade out there. We'll put it out here like this. It's not a sexy trade. If it hangs anywhere above probably 21.70 to 23, it's going to be a profitable trade. This is profitability. Anything under 21.70, we start to look at a loss. As you can see here, we're not asking for it to go up. We're just asking for it to not go down. We want it to just stick around this 23 area. That's going to be max gain on the trade.
And last week in consumer, we were long McDonald's. And we're going to see in the chart, I mean, this is pretty much the same situation that we had in Gilead. Just money went elsewhere. Now, you look at Thursday, Friday's action, despite the fact that the markets were up, those aren't really good-looking candles. I mean, so McDonald's was down 1.18% on the week. I mean, this is still a viable trade. It just melted back into that basing area. So we'll see if it's going to hold 270. I think the trade is still viable. This week we're looking at Keurig Dr. Pepper, coffee, and soda pop. I don't know how they exactly got together. I'm sure there's some sort of economic treatise on that. Anyway, the ticker for that is KDP. And we're just going to play this thing sideways. You can see it's just been in this range, between about 36 and 39 right there. And if the stock is going to do it, we're right in the middle of that range. Yeah, look great. Let's play it sideways. See which ways we can do it. So what we're looking right here, I think the best way to play this, just a 1 week 36, 38, 40 call butterfly. Just play it, set it, let it go till expiration, size it for max loss, and go from there. Now, if you think that this thing has got some bullish legs to it, you can play that. You can play a call diagonal on it as well. And you can just let the next 5 days of premium bleed off. I'm going to play this one just strictly sideways here for the next 5 days. In technology, last week we were short Unity software. And this is one that you can see. We've talked about this before. We alluded to it earlier today. It's the stuff that just looks absolutely horrible. And it looks to be on the march of death. And you get one of these rip your face off bear rallies right here. I mean, down from 27 to 21 in about 2 weeks. I mean, that's a 30% drop right there. Anyway, to make a long story short, Unity, probably in some sort of a short squeeze, was up 28.74%. And really all that happened was in the last 2 days, the same with the rest of the market. If you'd looked at this thing Monday, Tuesday, Wednesday, all 3 of those days were trigger days. And then we just get, whipsawed on Thursday and Friday. And you know what? That's just the nature of trading. You're going to have 1 or 2 weeks of this every year where all the directions are looking one way, and then all of a sudden it just rips the other way. And there's nothing you can do about it. That's why position sizing managers, that's why position sizing matters. That's why portfolio management matters. You have to take all these into account, and you'll just go back at some point later this year, later next year, and said, yeah, that was a trade that didn't work out for me. This week, we're taking a look at IBM. So what we're going to do, we're going to go long those December 2nd 140s, and then just short the November 18th 145s. It's a pretty wimpy trade right here, and that's fine. We don't need to be heroes in everything that we do. Sometimes this trade, we're just asking to make about $2 in the next 5 days. Totally possible for IBM to do. We want it to stick around there at 140, about 145, and wait and see what it does.
Moving on to materials. Materials was a really big beneficiary of the weakness of the dollar. This week in materials, we're looking at Corteva. Now, when you take a look at the whole sector, most everything is coming off the bottom. And it was very difficult to find something that has been outperforming. This is one of the few that's been outperforming. And you can see it did not have a good candle on Friday. That's fine. We understand that a lot of times these the things that have gotten hit the most when the markets bottom out, they get all the money, and all the stuff that's done well, people sell it off and go reallocate the money. That's fine. We'll just simply let this pull back. This 64 is a really great little point. As you can see here, there is some major support there. I think it's going to be at least 2 to 3 days. We want to see it come off this level, bounce. Once we can see that bounce, I'm looking up to 70, 65, 70, bull call spread all the way out to December, giving me plenty of time for this trade to work. Next up is energy. Now, energy, we've been playing things either bullish or sideways, and this is range resources. We played it sideways, and you can see the stock stayed exactly where we thought it was going to within this range here. So nice sideways trade on range resources. This week, we're going to get a little bit more bullish this sector. This is one of our favorite stocks at Maverick. It is called Schlumberger. Now, this goes back to over 20 years ago. One of our traders, one of my good friends, Joe, he was brand new to trading, and he didn't know what any of the stocks were. And I asked him, hey, what are you trading now? And he told me some stocks, and he's like, I'm in this one SLB. I think it's called Schlumberger. Now, the name for it is Schlumberger, which sounds way more sophisticated. It's like going to Target instead of going to Target. But when he called it Schlumberger, I'm like, we are never calling it the right name again. This is Schlumberger. So let's talk about Schlumberger. It is having a great little run here. And whenever you see something have this massive run, 34 to 52, and there's no pullback whatsoever, it's a great sign that it wants to keep going and wants to keep going higher. So we like this one. It's showing some relative outperformance. And I like this 50-55. Going back to the diagonal call spreads, just a really simple, easy trade saying, hey, you know what? I think it's going to stay above the 53 area. As long as it stays above the 53 area, it's profitable. It doesn't matter what happens. It just can't go down. So I think these are the right plays. This is a 1 week trade. And then at the end of the week on Friday, you get to decide, do I want to keep the trade? Do I want to dump the trade? Do I want to roll the trade to the next month? You get to decide what to do. All right, well, that is it for our trades. If you're a Maverick trader, jump onto our website, go into the forum. Please, let's share trades with the whole rest of the group, making sure that everyone has tons of good trades to look at. The technicals are now bullish. Whether you want it to be, whether you think it should be, how you feel, it doesn't matter. It doesn't matter. We've been talking about this bearish seasonality for months. We warned everyone in August, hey, the worst 2 months of the year are coming up. September and August are typically terrible. And they were terrible. And we warned people. We said, hey, be short. We had a great 2 months. And then we actually told people starting in the beginning of October, hey, we're about at the end of negative seasonality, and we're about to reach the point of the most positive seasonality in the markets, the 6 months after the midterm elections. And so we said, hey, let's pare back our bearishness. Let's go to a neutral. We'll see what happens. Look, we have no idea if we're going to get a post-election bump. No idea. But the seasonality pattern says, be more bullish. The markets are telling you to be more bullish. So it's easy. Just be more bullish. You could be wrong. We could be wrong. That's okay. That's what risk management is for. But trading with the market, that's where we want to be. Ultimately, though, when we take a look at the next 3 to 6 months, tech is likely to underperform still. There's a lot of headwinds for tech, so we like things like industrials, healthcare, financials. Those are looking much better than tech. Thank you so much for joining us. Have a great week this week. We'll see you later. Goodbye, everyone.
Good trading, everyone.